Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, March 11th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a really nice day here in Colorado. I've got shorts on. It's so nice. Plus, it's laundry day. So I was out of long sleeves and in pants. So anyways, hope you're having a fantastical day out there. Markets are taking another hit as Trump doubles tariffs on Canadian steel and aluminum up to 50%, stoking fresh trade war fears. The Dow is down. Well, it was down about 600 points. The S&P 500 is nearing correction territory, and the NASDAQ is struggling to recover. Tech stocks like NVIDIA and Palantir are attempting a rebound, while Oracle and Delta Airlines are sliding on weak earnings. Investors are piling into short-term treasuries as recession worries grow, and markets brace for more volatility ahead. So before we break everything all down, if I could get a favor from you, if you give me some thumbs up, I'll like, share, subscribe, and follow, and press the notification bell. All right, let's hop into the markets. Here we are. Dow Jones finished the day down 1.14%, 478 points, closed at 41,432. The S&P 500 down 0.81%, 45 points, closed at 55,68. NASDAQ down 0.18%. It was in the green just a few minutes ago. Down 32 points, closed at 17,436. The VIX was also down today, 2.94%. It's at 2704. Canada down 0.54, Brazil down 0.7, and Mexico down 0.61. In Europe, Germany was down 1.34, the UK down 1.21, France down 1.31%, Netherlands down 1.42, Spain down 1.57, Italy down 1.38, Switzerland down 2.6%, and Portugal down just 0.01. Russian exchanges were mixed today. The MOEX down 1/10, the RTSI up 2%. And the overnight markets, the Nikkei in Japan was down 0.32%, Australia down 0.91%, New Zealand down 2.16%. In China, the Shanghai was up 0.41%, the Shenzhen component up 1/3, China A50 up 0.47%, DJ Shanghai up 0.32%, Hang Seng down 0.01%, and the Taiwan weighted down 0.61%. All right, so those are our markets, folks. All righty. Well, let's get into the market recap. U.S. stocks slump as Trump slaps fresh tariffs on Canada. You don't want to slap around Canada too much. All righty. Let's see what happened here. The S&P 500 extended its decline on Tuesday as President Donald Trump's announcement of fresh tariffs on Canada stoked fears of a worsening trade war, compounding concerns about potential economic recession. Well, I think we're headed towards recession regardless, simply because all we did was postpone it with all the stimulus 5 summers ago. But, what do I know? The S&P 500, Dow Jones Industrial Average, and the NASDAQ all continued their sell-off, with the NASDAQ 100 posting its worst day since 2022, all the way back then. Trump revealed plans to double tariffs on Canadian steel and aluminum imports to 50%, following Ontario's decision to impose a 25% duty on electricity exports to the U.S. He further escalated tensions by demanding that Canada remove tariffs on up to 390% on U.S. dairy products, and signaled he would declare a national emergency on electricity in affected areas. The uncertainty surrounding Trump's policy moves, including mass federal employee layoffs and a looming government shutdown, added to market instability. Moving forward, in the airline sector, Delta Airlines fell 8% after issuing a profit warning, citing weaker than expected domestic travel demand. The airline slashed its first quarter profit outlook to 30 to 50 cents per share, well below the prior forecast of 70 cents to $1 per share. CEO Ed Bastian noted that economic uncertainty was dampening corporate travel spending. Meanwhile, Southwest Airlines defied the trend, surging 8% after announcing new check bag fees and a lower cost fare tier. Tech stocks were mixed, with Oracle dropping 4% after reporting weaker than expected guidance despite a surge in bookings. Kohl's also tumbled over 25% to a new 52-week low after disappointing earnings. Well, maybe they should do what they do with their price labels on their stores. Everything's on sale, 30, 50, 40% off, but that's just their average everyday price. Everything's always on sale there. So anyways, however, Tesla managed a slight 1% gain as investors hoped for a rebound, though concerns remain over Elon Musk's focus on Dogecoin rather than Tesla's business. With rising trade tensions, corporate earnings disappointments, and a growing recession fears, investors are bracing for further market turbulence ahead. Probably a good idea because it's going to get bumpy. I've been saying this for a while, folks. Anyone who thinks things are going to be smooth, you got another thing coming. All right. Next up, got some jobs data. U.S. job openings rise, layoffs low before Trump policy shifts. All righty. The U.S. labor market remains steady in January with job openings increasing and layoffs declining. However, economists warned that uncertainty over Trump's escalating tariffs and aggressive government spending cuts could slow hiring in the months ahead. The job openings and labor turnover survey showed that job openings rose by 232,000 to 7.74 million, with the job openings rate ticking up to 4.6%. Let's see here. Despite the gains, hiring remained tepid, signaling caution among businesses as trade and fiscal policies create economic headwinds. Retail trade led the increase in vacancies, adding 143,000, followed by financial activities plus 122,000 and healthcare up 58,000. However, professional and business services saw a decline of 122,000 openings, and the leisure and hospitality sector shed 46,000. Federal government job openings also dropped, likely due to the Trump administration's hiring freeze. The labor market's resilience comes as financial markets continue to react to Trump's unpredictable trade policies. On Tuesday, Trump announced he would double tariffs on Canadian steel and aluminum imports to 50%, adding to existing levies on Chinese goods. Meanwhile, Elon Musk's Department of Government Efficiency has cut thousands of federal jobs in an effort to shrink government spending. Economists warned these mass layoffs could spill over into the private sector, impacting broader employment trends. Small businesses are also growing wary, with the Small Business Optimism Index dropping 2.1 points in February, while the Federal Reserve is expected to keep interest rates steady at 4.25% to 4.5% next week. Investors anticipate rate cuts by June as recession fears mount. Despite stable employment figures, the broader labor market shows cracks. A rising number of part-time workers, an increase in multiple job holders, and anticipated federal layoffs suggest potential turbulence ahead. Well, I have been, advising people, if you know anyone who works for the federal government or the federal government is your client, you probably want to start looking elsewhere in the private sector for work, simply because it's just going to get ugly. All right. Last up, an article from Zero Hedge, Uncharted Waters, How President Trump Can Navigate Towards a More Resilient Economy. This was written by Daniel LeCale and Jaime Figueres. Let's see here. The U.S. economy is at a crossroads, facing both market volatility and mounting financial pressures on older Americans. As President Trump enacts sweeping economic reforms, including tariff increases and spending cuts, uncertainty looms over how these policies will impact growth and stability. At the same time, an alarming rise in credit card debt among older Americans is creating a financial crisis for those nearing retirement. The recent market turbulence reflects investors' concerns about the potential for a recession fueled by Trump's aggressive policy shifts. While critics blame the new administration, economists argue that the real culprit is years of reckless government spending and record deficits. I would totally agree. And also keeping interest rates at zero during the entire Obama administration and most of Trump's first administration. Keeping those rates artificially low, builds up, inflation in the system that, you don't necessarily see until the bubble pops. Where were we? The path to long-term stability, they argue, requires supply-side reforms, including tax cuts, deregulation, and spending reductions, despite fears of short-term economic pain. Supporters believe these measures will create a more resilient and productive economy. I agree. Spending less on government projects and keeping that money in the private sector is obviously better for the economy long-term, because, when the money goes into the government, it just gets, set on fire. So it doesn't really do anything for the greater good. All right. Let's see here. However, not all Americans can afford to wait for long-term benefits. A recent AARP survey revealed that nearly half of Americans over 50 rely on credit cards to cover essential expenses, with many carrying balances over $5,000 or more. Rising healthcare costs and inflation have pushed older adults deeper into debt, limiting their ability to save for retirement. High interest rates are compounding the problem, forcing many to choose between paying off debt or securing their financial future. Trump's economic policies aim to rebalance the U.S. economy by fostering private sector growth and fairer global trade. While these reforms may ultimately lead to lower costs and increased prosperity, immediate action is needed to address the financial struggles of older Americans. Policymakers and financial institutions must work together to lower interest rates, expand financial education, and provide stronger healthcare support, ensuring that economic recovery benefits all generations. Yeah, we'll see. Unfortunately, we have dug ourselves a $37 trillion pit that we have to climb our way out of. And I mean, the government only brings in 3-4 trillion dollars a year in taxes. So you're looking at more than a decade to pay that off, and then in factor in interest and everything else. I mean, it's probably 20 years, and that's really not paying anything towards public salaries or social security or any of that stuff. So I mean, you want to continue to pay those bennies to everybody else, you're going to have to figure out a way to do it. I mean, you could sell the public lands, or I mean, well, first you'd have to, give them back, offer to give them back to the states that they're in. And well, if the state says, well, you can sell it, we don't need it. They could sell the land to developers or whatever. I mean, I would take, as reparations for all the taxes I paid over the years. I'd take 1,000 acres in Rocky Mountain National Park as compensation for the theft that I've had to put up with the last 20-25 years. So anyways, all right, well, that's everything that I wanted to cover for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All your financial planning needs can be addressed there, so give me a call. I'd be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.